Okay, great. Thanks, Neil. For those of you that are new to the Indiva story, my name is Niel Marotta. I'm the co-founder, president, CEO of Indiva Limited. And so as Neil said, I'll go through the Indiva story fairly quickly, probably in about 15 minutes, and then we'll go right to Q&A. Feedback seems to be that generally people like the Q&A, but without further ado, I'll jump right in here. On the title page, so we're a licensed producer in Canada. We are the leading edibles company. You can see a lot of different edibles products, some that are about to hit the market, some that have been in the market for a year or two, and some that have just been on the market for a matter of weeks, namely those cookies. We don't just make edibles. We have a super premium flower brand called Artisan Batch, and then our own brand, Indiva, which was our initial product launch, and the 1.0 products, we have pre-rolls, a little bit of flour, and some capsules that we do sell. I'll let you take a look at this forward-looking statement on your own time, but that is a picture from our facility. We don't grow very much in that facility anymore. We've basically got one grow room, but as you're accustomed to, these cannabis facilities are super clean environments, and ours is no different. Some quick highlights about the company. Our stock closed at almost 44.5 cents Canadian today, which would put our market cap somewhere around 60 million. We are a top 10 LP in Canada, so right off the hop, I would encourage people to take a look at some of the transactions we've seen this week for companies with a third or a quarter of our market share getting taken out at that valuation. So we think there's a tremendous amount of upside to the valuation of the company. Our basic shares out 136 million. We have some long-term debt that was provided by Sundial in the February private placement, and a convertible debenture outstanding. Insiders own about 10% of the company. And I'll go through all the rest of those points as we go through the presentation. More pictures from our facility. We have one facility, not in one country. That has very much been intentional. We've always approached this business as a consumer packaged good company should be approached, we think, which is focus on margins, profitability, free cash flow, with the ultimate goal of whether we pay a dividend or not, we certainly want to be able to. We don't think that ignores the growth in this industry at all. We just believe in profitable growth. So our facility is fully licensed. It's 40,000 square feet. It's in London, Ontario, and that's where we produce all the gummies, chocolates, etc. We're currently operating at about 50% capacity, and we are dominating the category at around 50% market share in Canada. So lots of growth still ahead. This is absolutely my favorite chart, especially after the Q2 that we just reported last week. We hit 9.1 million of net revenue in Q2 2021. That was a 46% jump from Q1. And you can see on a year-over-year basis, we almost tripled revenue, more than tripled revenue. So we're very proud of those results. Maybe more interesting is our gross margin improved to a record 34% adjusted. We've talked about this quite a bit, the impact of declining distillate costs on our gross margins. In Q2, our COGS were about 6 million, and fully 1 million of that was from distillate. That was at 2 cents a milligram. We are buying distillate now at half a penny a milligram. So that would imply about an $800,000 cost savings that are sort of quote unquote baked in the cake at that run rate. That would have taken our gross margins well into the 40s, and that's quite respectable. So that's where we expect to get to by the end of the year. Q3 has some seasonal weakness, but that's leading into sort of September through the fall, which is our seasonal strong point. So the second half of the year we expect will be much stronger than the first half of the year, with margin improvement to boot. Quick look at the lay of the land in Canada. We're well over 2,000 stores now. I often say this chart is obsolete as soon as we publish it, but the store growth has been fantastic in Canada, and I think the whole industry has been a beneficiary of that. I want to talk a little bit about edibles. We've had this chart in our deck for a long time, but edibles represent about 10 or 15% of U.S. markets, sometimes more than 15%. In Canada, we're still hovering around 5%, a little less than 5 if you include Quebec, a little more than 5% if you exclude Quebec, where edibles are currently not legal for sale through recreational channels, only medical channels. And we do sell edibles through Shoppers Drug Mart in country and in Quebec. So we expect the category has a lot of room to grow. Edibles are relatively new, came in about a year plus behind the 1.0 products, and really kind of started off right in the middle of the pandemic. So we think there's all kinds of growth here for the category, and we are seeing that. I won't spend too much time looking at the industry slides. I would encourage you to take a look at this. We published a lot of the high-fire data in our deck just to give people, a big picture perspective on where the Canadian cannabis market is, given that 100% of our sales are in Canada. But also just going a step further, we're looking at the edible category itself. And this shows how the category has grown as a percentage of the total pie, let's say the total cannabis industry in Canada since edibles became legal in January of 2020. And what I can say, August, it's a bit early for the August numbers to be included, but it looks like the category has continued to grow into August as a percentage of the total. This next slide looks at the breakdown of chocolates versus gummies, where chocolates are in orange and gummies are in the darker black color. You can see a massive amount of the growth, if not all the growth, has come from the sale of gummies, where we lead. What's probably almost as telling in this chart is just how small the other category is. So, more than 95% of the total in Canada is gummies and chocolate. And just to, not to give you guys a headache, but to run back here a couple slides, if you look at California, 25% of the edibles category are what you would call other, and Colorado very similar. So we think that leads into part of our strategy, which is introducing more baked goods. We just introduced slow ride cookies. We have seasonal offerings, and we think there's all kinds of room for the category to grow, not just through awareness and not just through marketing, but through innovation, new product introduction, and new SKU introduction. This gives you a bit more perspective here. In July, we were ranked 12th nationally. Other measures have us in the top 10. This on an LP by LP basis has us ranked 12th. I believe that might tick up a notch in August if the numbers hold. So we really are in categories with a a 60 million market cap against companies that have multi-billion-dollar market caps. So we're absolutely punching above our weight. Very proud of that. This is some data from Headset showing how much Indiva products dominate the top 10. You can see Bhang and Wana, 7 of the top 10 products belong to us. This is another chart showing how our ranking has improved since we introduced edibles. The black line represents our ranking in Ontario, and the orange line represents the national ranking. So to go from, let's say the 20s or 30s into knocking on the door of the top 10 on an LP by LP basis, I think is pretty good performance in a year and a half's time. And this actually shows our market share gain, where the black line on the right axis shows our total market share at approaching 2.5% nationally. Again, we think that's a great number. And on the edible side, actually ticking above 50% in July, which we're very proud of having dominance in that category. One more way to slice the pie. This looks at gummies at the black line and chocolate with orange in the orange line, and so our share has continued to grow and also stay very strong. That tick up that you see here in July and June into the 40% range in chocolate was really driven by the introduction of our cookies and cream SKU, which has done very, very well. Bhang Milk is the #1 selling SKU in Ontario for their fiscal year. Cookies and cream is quickly caught up to it. So it just shows the power of new product introduction and innovation, and we do have many products in the pipeline. This is a chart from combining data from Raymond James and StatsCan showing us in the top 10 for Q2. So again, we're very proud of that, having done that at one facility with organic growth without acquiring our way to that kind of market share. We're very happy to be where we are. So talking a little bit about products now, away from the bigger picture, drilling down. What we tried to do here is put together a matrix of all the different provinces that we sell in. So we are in every single province and territory with the exception of PEI and Nunavut. So we essentially cover 99% of the country. We also have partners in the medical channel. And what we've done on here is shown which products are available in which provinces. Our goal is always to go as wide as we can with the products that we offer, but we do it at a reasonable pace. And I'll use cookies here, which I'll talk more about in a minute, as an example, where we've only launched in Ontario for the time being. We don't have any immediate plans to go wider than that, only because we want to see how the product does in Ontario before we commit to larger capacities with our partner Slow Ride. But so far, sales have gone very well, and I'll talk about that momentarily. I won't bore you too much with the team, but all of the folks here are deeply experienced with in their fields, and in particular in sales and marketing, production, distribution, supply chain of consumer product goods. And I think that's played a large role in our success. This is a nice grouping of all the brands that we launched. We've talked a lot about Bhang in the past, our chocolate brand that we licensed. Bhang's award-winning in the US and is now winning awards in Canada. Same story with Wana, although we introduced Wana. Actually, this month represents the 1-year anniversary of Wana being in market. So to go from 0 gummies in market a year ago to having over 50% share in the gummy market in 12 months, I think is a testament to the quality of the products and formulations that Wana came up with. And I would say also a testament to the ability of the Indiva team to execute on our plan. I'll talk about more of these brands as we go through the next few slides, but we talked a little bit about the Indiva branding. This is a very small part of our sales and artisan batch, which is growing, but 93% of our sales come from edibles. And the vast majority of those are from the Wana gummies. And so we have now 10 SKUs in market. We've got 3 more Wana gummy SKUs on the Wana Quicks, the fast onset gummies coming this year, as well as 2 multi-packs that we'll introduce. Interestingly, I often get the comment, I wish I could eat more of your gummies. And unfortunately, we cannot put more than 10 milligrams of THC in a package. And as a result, if we want to add more gummies, we need to lower the THC dosing per gummy. So these 10 packs will be 10-to-1 CBD to THC. And I would look for those in your provincial wholesalers and in your local dispensary this fall. These are our Bhang chocolates. Again, Bhang milk was the highest velocity SKU in the entire OCS for their year ended March 2021. Very proud of that. I think with a full year of Wana sales under our belt, I would expect that probably one of our Wana SKUs will take that top spot next year. And we do have more chocolate SKUs coming out, seasonal SKUs, so stay tuned for that. A little further down, we've talked about the sugars and salts and jewels for a long time. I'm very happy to say that the jewels, which are something like a sweet tart, that product will come to market later in Q4. And that'll be followed on hopefully by Q1 with the sugar and the salt. We're currently making the sugar because that's a key component in the jewels. But packaging of that sugar is a little bit tricky. And so it'll take us a few more months to get it to market, but we're excited to launch that. And most recently, we launched Slow Ride cookies. Slow Ride is a local microprocessor based in my hometown of Ottawa, Canada. And terrific backstory to this mom and pop team who were longtime medical users and got into baking these cookies as a way to consume cannabis for medical purposes without smoking. So we're very, that's near and dear to our heart at Indiva. And so we're very delighted to bring these cookies to market. The launch has gone very well. They only hit shelves about 3 weeks ago. I can say we've sold well over 20,000 cookies from the DC into stores. And this has quickly made us the leader in the baked goods subcategory. So in time here on our next update in this deck, we'll have more information about the baked good category, but we're very happy to be leading in gummies and in chocolate and now also in baked goods in the edible category. So our strength in this edible space continues. I won't bore everybody here with the long list of all the corporate development over the last 4 years. We did go public in late 2017. Yeah, I'll let you read that at your own leisure. And this is a mock-up of our facility in London, Ontario. But before we go to Q&A, I think one thing I would like to point out is if you assume stores are open about 12 hours a day in Canada, which is about right, we sell a pack of edibles every second in this country, and that is tremendous product velocity. You know, we might be in the top 10 as an LP in Canada by dollar share, but when you look at units sold on a monthly basis, we're actually number 3 behind only Tilray and Canopy in Canada, and we're knocking on the door number 2. I wouldn't be surprised if before the end of the year we are the second largest LP in the country by units sold. So we're very proud of that, and we expect that to continue.
Amazing, Neil. Great presentation. Thank you very much. We got quite a few questions already. I'm not sure if you were done there, but I think we'll just jump into the questions right now. And yeah, fantastic presentation. Thank you. Awesome.
Sure. Thanks.
Do you see the questions now?
I'm going to try and go in chronological order here so that I don't miss any new ones coming up.
Let's start from the bottom up, and I'll manage them at the same time.
Sure. So question number 1, I'm happy to read the questions out if people can't see it. What are your thoughts on the M&A in the space? Looking at the Valens acquisitions of Verse and Citizen Stash. Yep, those happened in the last 3 days. Sundial Inner Spirit, assume getting lots of inbound calls. Yeah, I mean, obviously we've had lots of approaches over the years, and I guess we've said no to every one of them because we're still here. You know, those 2 examples you gave of Verse and Citizen Stash, without commenting on the quality of the acquisition, that I don't have any opinion one way or the other about that. But when you look at the valuation and the prices paid, and you look at the market share, you know, Citizen Stash, I think the price was $54 million, but we have about 4 times that market share, and that's roughly in line with our market cap. So, you know, I would argue if you were paying for market share, these should be paying 4 times that number, some $200 million for Indiva, not the $60 million that our cap is at now. I would expect consolidation to continue. I am not 100% sure that it's always opportunistic selling. I think it's absolutely opportunistic buying. And we're really turning the corner on being cash flow positive. We had adjusted positive EBITDA in Q2, and we would expect that to continue. So I have no doubt we'll continue to get inbounds, and we'll listen to them all. But you know, if we're going to do anything, it's going to be at the right price. That's for sure. Next question: can we comment on the launch of cookies and the confectionery space as a whole, as it appears to be small? Yeah, you're right. It's a good question. It is a very small part of the Canadian industry. You know, baked goods only count for about 1% of edibles. We talked about that other category being about 25%. Inside that 25%, about half of that is baked goods when you look at mature markets. So that implies all kinds of upside for the Canadian market if we can continue to bring out innovative products in the baked goods category. You know, I think in Ontario, there's all of 6 SKUs listed. 3 of them are ours. There's a couple of brownies and another salty snack. We have more cookies that we can bring out, and we absolutely plan to innovate and keep growing. We think this is one way to grow the edibles category as a percentage of the pie, is by adding more of the variety that you would see if you went to U.S. dispensaries. Next question is, Quebec given any indication of movement on edibles? Short answer is no. That's long-term upside, but I'm not expecting much movement from Quebec. And in terms of the edibles limits, just as a tangent, we're getting more and more involved in the Cannabis Council of Canada, which is the largest lobbying group representing the cannabis industry in Canada. So we'll make sure that our voice is heard. We'll do as much as we can to try and convince governments that higher potency limits actually improve public safety. I think you can make a very strong argument that the cases where people are getting into very high dosage edibles are from the illicit market, where the packages are not child-proof or child-resistant. The packaging looks like candy, and it should be no surprise that you get accidents. And same thing with Quebec. We'll do our best to try and make folks aware that, look, this is public safety, and there should be a safe legal alternative, whether that's potency or just availability in the first place, for the Canadian market. Next question is on the Dycar Agreement. Any color? I'm confused what the different phase entails and what we should expect from that. Yeah, that's a contract manufacturing agreement, which comes with monthly obligations. So we're working through that contract, and we sell Legend chocolate to fulfill it, and we also sell flour to fulfill that contract. Next question: is it reasonable as a long-time shareholder to expect that if the share price does not move up significantly by year-end, that the board would seriously consider starting a sale process? I think it would be irresponsible for us to put an arbitrary timeline on when we would want to start a process. That is not something that you do lightly, and generally not something that you start and then abandon. I don't know that Christmas or year-end or holiday time or any one specific date it should be a deadline in the sand of when we would run a process like that. But it is something that obviously I'm aware of. I've spent 25 years in capital markets, and there's nothing preventing us from starting that process. On the other hand, if we're becoming cash flow positive and our profitability is improving, if the stock continues to get good traction, I mean, we're up over 50% year to date, then I wouldn't see any need to run that process. Next question is, are you able to add additional brands for chocolates, or are you limited to Bhang? If not limited, is there a desire to add another brand? Good question. We absolutely can add another brand. There are some minor intricacies on some of our brands where we would not want to introduce a competing product. I think in the case of chocolate, I mean, we already sell Legend chocolate as part of our contract manufacturing agreement, so we can do it. I would say we're always open to any ideas if we think that they're very worthy, but as it stands now, we're quite pleased with the Bhang product, and I think I'm not sure that we would want to introduce something that would actually be a competing product with Bhang. So it would have to be something really great and innovative and different from what we currently offer. But we can do it, and certainly we would entertain listening to a pitch on a different brand. Next question is Indiva exploring uplisting to the TSX. The short answer is yes. The longer answer is we want to make sure that our auditor and our finance team as a whole, we run the company pretty lean. We want to make sure that we have the bandwidth to meet the tighter reporting periods that you would have on the TSX. So I would say stay tuned, and if that's something that happens, it's probably early next year or later this year at the earliest. Next question. I suspect there is quite a lot of regulation on how you market these products. What kinds of things do you do to get Indiva products to stand out in store and otherwise? A great question. There are an enormous amount of regulations that make it very difficult to market edible products or cannabis products in Canada in general. And so typically what we do is we focus on age-gated online and digital advertisements. So that includes social media, but only our Instagram or LinkedIn is all age-gated. And then we focus on in-store and in print. So magazines like Kind Magazine, you can often find terrific spreads and ads and articles about our products. In store, there are digital platforms that we use, rolling pictures, etc., to advertise our products in store where it's also legal. And then the other thing that we're doing and making a strong investment in is the in-store trade marketing and displays. And so not all stores have products on display. Many do. I would say most do. And in many cases, the velocity of our products is so strong that the retailers are naturally incented to put our products on display. But if we can provide them beauty packaging and all the things that go with it, acrylic fact tees, etc., good product information and beautiful displays, I think it incents the stores to carry the product. It also creates a conversation. There's 1,700 SKUs available on the OCS now, and most stores wouldn't carry more than about a third of that. And then in terms of being on display, it's a much smaller subset still. I mean, you're talking dozens or so products that are actually on display. And if customers can't find your product and they don't see it on display, it puts you at a disadvantage. So that's where we're investing our marketing dollars. Sorry, here, next question. Can you provide an update on the gummy competitive landscape? Are there any new competitors being launched? Seems like there's almost always new gummies coming to market. There have been a couple of brands or a couple of SKUs that have come out recently that have done very well. And I what I can say is it's not hurt our sales. It appears that it's more likely grown the category in the last month or two in terms of, so let me break that down another way. If our market share did shrink, it wouldn't be because our sales are going down. It might be because another competitor is growing the pie, and that's fine. We're totally in favor of a cola war. I don't think Coke would be Coke without Pepsi and vice versa. So we feel the same way about the edible category. We don't obviously want to see a price war, and I don't think we will. But so far the new entrants seem to be growing the category as opposed to stealing sales away from our products. Next question: with the OCS throttling back on new SKUs the next 6 months, is that beneficial to Indiva market share? That's a tough one to answer. What I can say is we've just gone through recent product calls with the OCS, and we have several new SKUs that have been accepted. I would say, without talking specifics, which I can't yet, the percentage of new SKUs that we received of those accepted was well above our market share. So to try and say this a little bit less cryptically, of the, say, 1,000 SKUs or so that were submit, about 10% were accepted, and we got somewhere around 10% of those. So I guess throttling back could help in a sense, but I think the whole market is still very young and nowhere near maturity. So I think new, innovative, high quality products grow the whole pie. They don't just necessarily take away from Indiva. Next question: can you comment on the sales velocity of the newer Wana Quick SKUs? It varies province by province. In some provinces, they're ahead of the traditional SKUs. In some provinces, they are behind. But overall, none of those SKUs are anything below good. Not every SKU can be number one or be great, but they're all absolutely viable SKUs. None of which I expect to be delisted anywhere anytime soon. And we do have many more of the Wana Quick flavors coming out, including some very special sleep gummies that we'll talk more about in future presentations. Next question: is Indiva permitted to make their own house brand gummies and chocolate? Absolutely. Yeah, the short answer is yes. We get this question a lot. I mean, why wouldn't you just make your own gummies? I think the market share speaks for itself. We have not had to invest hardly anything in R&D to get to where we are. The formulas and cannabinoid profiles of the Wana gummies and the terpene profiles are very powerful. That entourage effect is real. And so we're very happy to work with licensed partners. But there's, in theory anyway, nothing stopping us from launching our own branded edibles, gummies, chocolates, or otherwise. Next question: seems like your launched products and pending products cover all the possible edible subcategories. Are there other form factors on your radar? Yeah, the short answer is yes. There's always new changes in regulations. One of which is adding concentrates to pre-rolls. That's interesting. I would absolutely love to sell oils in pet treats once we're actually allowed to do that. As it relates directly to edibles, I wouldn't expect that we'll go anywhere near beverages other than through our flexible edibles like the ruby sugar and sapphire salt. But if you can imagine it, it can be done. So I think it's just a matter of finding the right partners or innovating ourselves to come up with something unique that we think will have enough velocity and enough demand to commit the capital to launching. Next one: do we have full year guidance on gross revenue, EBITDA, net earnings? We don't normally give guidance, but what I would say is that we sort of loosely talked about how we could get to 40 million of revenue and 6 to 8 million of EBITDA for the year. Through the first half of the year, we hit 15 million of net revenue with flat EBITDA and margins in the high 20s. What I would say is that we would expect gross margins to be north of 40% by Q4. And then the second half revenue should be significantly higher than the first half. So if you just multiplied the first half by 2, you'd be north of 30. So when we get to 40, I think it remains to be seen what the back half of the year actually looks like. But the margin improvement will be there, and that's when we'll start seeing significant gains in EBITDA. And then obviously our goal is to get to being earnings positive. It's nice to have adjusted positive EBITDA, but earnings is what we really want to see. Next question: could the elections have an impact on the current legislation surrounding edibles? Not in the immediate term. So the Cannabis Act is going to begin a review next month. That will probably take about a year to get through, at which point there'll be a report to Parliament. Then you'll see legislation follow. So it could be legislation that would necessarily be dealt with under a new government, given we have an election in about 2 or 3 weeks here in this country. But I wouldn't expect any major changes coming as a result of that election. Next question is, pardon me, have you explored doing a similar partnership as Slow Ride for beverages? The short answer is no, mainly because we haven't been approached. We do get approached from time to time by folks that have ideas. Most of the time, they just want to rent some square feet in our facility and operate under our license, which is a non-starter. We don't do that. That's not a business, in our opinion. But look, if someone came to us with a terrific idea and was all set up and the economics worked, I suppose we would consider it. But honestly, I just think there's already plenty of beverages available. There's a lot of very large, well-capitalized companies that are committed to beverages, and I'm just not 100% convinced that we would add any value in that category, and probably makes more sense to keep our focus and attention and capital committed to our strength, which is edible formats. One more here, similar to my form factor question, are there any other cannabinoids that you're contemplating marketing in your portfolio, CBD, CBN? Yes. So I would encourage people to, one of the nice things about partnering with Wana is that people can get a sneak peek either by visiting the US or by looking online at some of the products that are launching. And Wana just launched a Midnight Berry Wana Quick gummy, which actually does contain quite a bit of CBN. CBN has, anecdotally anyway, been very beneficial to sleep. So we're very excited to launch that product in Canada in the coming months. And we've had very, very strong interest from the provincial boards. So great question, Alan. And the short answer is yes, we absolutely will be introducing more minor cannabinoids into the products that we offer. One more question here. Would you use minor cannabinoids produced by biosynthesis? Good question. On the surface, I don't see why not, but I can't honestly say that I know, whether it's sort of shelf life or just the integrity of those cannabinoids produced through biosynthesis. I don't know that I know enough to know whether that would affect our stability studies, et cetera. So if it were a cheaper alternative and had no deleterious impacts on the product, then I don't see why not. I mean, we're always open to innovation. Having said that, the one caveat would be we would not alter the formulations that from say our licensed partners. So let's say using a synthetic THC, for example. If Wana was not using that in their products and not in favor of us trying it, then we wouldn't do it. The value of those partnerships mean a lot more than just innovating on the fly. Any thoughts on increasing analyst coverage for Indiva? Yeah, so we've been working very hard in that respect. We are getting a lot more inbounds and attention. There was a watch list report put out by Echelon a couple of weeks ago that would encourage people to try and get a hold of. We're not allowed to distribute research, so please don't ask me to mail it to you. But I'm sure if you chat with your broker, you can probably get a copy of that report. They also put out a nice update, and I would expect, hopefully, we'll see more research coverage in the coming months on Indiva. We're getting a lot more attention. Next one, should the need arise, is Sundial a likely provider of more debt? I don't know if I would want to comment on the likelihood, but absolutely they are supportive. And if we did have a need, we would 100% discuss that with them. So far, they've been very supportive and protective of us, and I wouldn't expect that to change anytime soon. Okay, that was a long list of questions. I'm happy to give it another minute, Neil, to see if any others come in.
Great list of questions, Neil. Thank you. And thank you, everyone, for the questions. They were amazing. Thank you. We're just going to give it another minute here. If anybody had any remaining questions, maybe Neil, just speak to what your next quarter, maybe next 3 months looks like. If anybody wants to join us at any live events that we've scheduled, the Money Show in Vegas,
Sure.
in November, maybe speak to that. And then we're going to host another presentation in late October as well.
Right. Yeah, I will be speaking at the Money Show in Las Vegas in a week and a half, presenting on Indiva and speaking on a panel. That's in a week and a half's time. Also participating, and we'll be speaking at the Benzinga conference in New York in mid-October. And then if you want to meet us in person and you're up in Canada and not ready to go down to the US or get on a plane, you can come see us at the Lift conference in November in Toronto. As always, if anybody wants to get into more detail, please feel free to reach out to Neil or Anthony Simone, our IR manager, and happy to have a chat.
Perfect. I think we'll just wrap it up with one last question. Dave's got one last question, and we'll wrap it up with this one.
Right. The question is, what do we look forward to the most for Indiva in Q3? Hopefully a higher share price, but look, I think the margin expansion is really going to kick in with some nice benefit in Q3. In terms of where do we land on net revenue, again, July and August are a little bit weaker typically for edibles, certainly for chocolate. I mean, Alberta stops delivering chocolate through e-commerce throughout the summer entirely. So I wouldn't expect huge sequential growth necessarily in Q3, the second half of the year versus the first, absolutely. But I would expect to see solid margin expansion in Q3 and then even more so in Q4. And that's it, I guess.
I think that's it. Yep. Great. Thank you, Neil. Great presentation. Thank you, everyone, for joining us. We'll launch, the replay will be available shortly this afternoon. And towards the end of October, we're going to host another one. Thank you, Neil. Have a great fall investing session, everyone. And we'll speak to you soon.
Thanks, everybody.